All right. Well, good afternoon, everybody. This is Steve Kay of Cattle Buyers Weekly, and about 25 minutes ago, USDA reported and released its monthly cattle on feed numbers. And if you haven't seen them, the numbers for the U.S. were cattle on feed on February 1, 10.989 million. That's 97.4% of a year ago. Placed in feedlots in January, 1.825 million, 98.2%. And marketed in January, 1.774 million, 102.1%. So I think it's a pretty positive report. It's probably not going to affect the market very much because we had such a surge in cash live cattle prices the last 2 weeks, gone up a startling $5 with $92 being paid in Kansas and Texas this morning, that this is pretty much built into the market in this report as well. But January marketings were slightly larger than forecast, and if you take into account that we had one less slaughter day in January than a year ago, the marketing number was about 6.6% higher than last year. That's no surprise, though, because with that one less slaughter day, daily average steer and heifer slaughter in the month was up 5.5%, and that big slaughter has gone a long way to really turning this market around for cattle feeders, coinciding, of course, with the full-blown weather market that we have. January placements weren't that much below last year, 1.8%, but the strong marketings meant the February 1 cattle on feed total was 2.6 below a year earlier levels. Interesting, of the major feeding states, only Iowa continues to have more cattle on feed than a year ago. Its total was up 15%, and that continues in double digits for several months now. And they placed 17% more cattle in January than last year. The other major states, Kansas did place 9% more, Nebraska placed 3% more, but conversely, Texas placed 5% fewer cattle, and Colorado placed 35% fewer cattle. If you look more closely at the placements, all the year-on-year decline in placements came in the 600 to 699 pound category, and feedlots placed 60,000 or 24% fewer cattle in this group. They placed exactly the same number, which was 420,000 in the 800-plus category. They placed 7,000 more in the category below that, 7 to 799, and they placed actually 20,000 more young cattle. That's in the under 600 category. So again, all the decline came in just that one category. Finally, if you look at the marketings from the major feeding states, Kansas feedlots did a great job. They marketed 10% more cattle than last year, although last year was a fairly low number. Nebraska marketed 6% more, Iowa 5% more, Colorado the same numbers last year. Texas marketings were down 4%, which really just reflects their smaller cattle on feed total. So the bottom line is verification that in terms of market-ready supplies are in good shape. We can't say the same about the physical conditions. Not as this winter weather has not been as bad as anywhere near as bad as 1992, 93, which was probably the worst weather market in recent history. But it's pretty sloppy out there, and that's really showing up in the lighter carcass weights. And I will just mention that because obviously the feedlots continue to market cattle aggressively in January and are doing so again this month. And the packers having to kill more cattle because carcass weights are way below last year. Steer and heifer weights, respectively, for the latest week, which has ended February 6th, were down 22 and 19 pounds. So it's a very much a key reason why packers killed a lot more cattle in January and will continue to do so. So I think that cattle feeders 30 to 60 days ago perhaps were hopeful, but really didn't see how we could get a $92 market in early February, and that's exactly where we're at today. And the cattle on feed report is almost a background event, but they're in good shape in the feedlots in market terms, and we'll just have to see how the rest of the month goes. That's all for this month. Thank you. All right.